latest World Bank Global Economic Prospects report paints a grim picture for the financial years ahead. It says uncertainty around COVID-19, rising inflation and debt levels threaten the economic recovery of emerging markets. Global economic growth is expected to slow from 5.5% last year to 4.1% in 2022. On the one hand, persistent supply chain bottlenecks are straining global trade, while a commodities boom could help export-reliant countries grow their economies. Let's unpack the story for you. IQ Business Chief Economist Sifiso Skenjana joins us now for more. Sifiso, it's great to talk to you. Thanks so much for joining us this morning. It's disappointing news, given that we saw such a strong rebound in terms of the global economy, at least, in 2021.
Morning, Michelle. Yeah, absolutely disappointing news. But also, I think in many ways unsurprising. I mean, I think we had seen, these supply chain shortages also impacting commodity prices. We saw microchip shortages as well, and that's impacted a whole lot of things in terms of car manufacturing, cell phone production as well. So I think it certainly was, starting to show signs of continued persistence last year as well. I think what's happening globally now, also particularly on the back of Omicron, really, seeing some of the countries getting up to 1 million daily rates is certainly, I think, starting to put pressure on the economic growth outcomes. We saw U.S. inflation numbers coming out, and the highest since 1982. And so really, again, some of the big pressure points coming there. And those are definitely then going to have a particular impact, particularly in the developing economies like South Africa. And I think we're going to be in for, as the World Bank says it, a hard landing this year.
Notable deceleration in major economies, including the United States and China. So what's that saying? The U.S. and China, they sneeze, and we're the ones who catch cold.
No, absolutely. They sneeze and we catch double the cold and the new variant of that cold as well.
Yeah.
And we're seeing now, of course, we're in the month where the Monetary Policy Committee in South Africa is going to be meeting to tell us the fate of our interest rates. And with inflation looking like that in the U.S., we expect, the IMF has already also indicated that we expect that the U.S. is going to accelerate its rate hiking cycle, and that usually puts pressure on emerging economies to increase their own interest rates. Our currency is also going to start sliding on the back of those inflation numbers as well, and so we're going to have a weaker currency. We are a net importer as a country, and therefore we're going to see a lot of pressure coming in. Again, fuel is going to be under pressure, and a whole lot of other things we're importing as well. And I think that's going to be a massive challenge just because of the sneezes that are happening globally.
So give us a sense, Sifiso, of some of those growth numbers. I mean, it's all good and well to talk numbers, but give us a sense of the leading economies' growth numbers and what those declines are telling us. And then give us a picture of how emerging markets will respond and will be affected. And, of course, we're focusing on South Africa's economy.
Yeah, I mean, I think there's probably more to emphasize on what are the things that are happening in those economies that actually result in either better than expected growth on their side or weaker than expected growth on our side. I think, as they said, is that countries that are export-driven are going to have better than expected export numbers because of the price pressures we're seeing from an inflationary point of view. And so some portions of our economy, for example, in terms of vehicle manufacturing, are probably going to perform better than expected. But as I said, is that all of the economies that aren't largely export-driven definitely then continue to feel the pressure. I think that's the one side. And as I said, if you look at South Africa, again, bring it back here, our currency is the 21st most traded currency in the world, and 84% of those traders are foreigners. And so again, when you see inflation increasing in the developed economies, what tends to happen is that the emerging economies tend to take quite a beating. And so if South Africa is one of the most traded emerging economic currency, you're going to start to see a lot of investors start to release holdings in that particular currency. and you're going to see also some of the gold prices increase as well. And so it just depends on the structural makeup of those economies and the portions on the pockets in which those economies are going to be impacted. Countries like, as I said, the US, are net abundant in terms of oil. So those things won't impact them as the way they would impact us because we are importers. So we just need to look at the structure of the economy itself, where you start to see where the real risks lie in terms of all of the developments that are happening globally. But as I said, is that it's certainly uneven impacts that you're going to have even at a developed and developing economy context.
Are there lessons, Sifiso, that we are learning in 2022? I mean, given what we've been through as a result of COVID-19 and its impact on our own economy and the global economy, the picture in 2022 and at the end of last year, for most of last year as well, was very different, primarily because of vaccines. I mean, did that play enough of a role to mitigate some of what resulted from COVID-19?
I think certainly vaccines are part of the picture and one part of the picture in terms of really saying the sectors that are impacted by tourism are impacted by vaccination, like tourism, for example. And those are the sectors in some of the economies that are bigger than others. In South Africa, tourism was contributed directly or indirectly to the economy up to about 450 odd billion to our fiscus. And so that sector being pretty much out of commission for 2 years, it certainly means that there's a big beating that you take at a sectoral level in that particular context. So lessons learned there around the need to accelerate, the vaccination programs, particularly to shore up some of those sectors like tourism. But on the other hand, I think there's a big lesson around localization, right? Pre-COVID, if you may remember, 3 countries had the global supply of about 67% of medical equipment that was related to the things that they're using in hospital for breathing, etc., ventilators. And so now big, considerations are thinking about how do we localize production in our countries for some of the things that are critical for the sustenance of an economy. And I think those questions are very critical right now in terms of looking at opportunities to create more domestic capacity, particularly in some of the economies that had been import intensive. And so I think for South Africa, if we really heed that opportunity as well to start to look at how do we localize a lot more and to find opportunities of creating what we call a comparative advantage that will make us able to compete even in a global context, but while deeply investing into local capacity building. I mean,
we're always thinking about the scars that will be left from the COVID-19 pandemic, particularly insofar as our economies are concerned. I mean, as you said, the tourism sector, just one sector massively affected by the pandemic, but also other impacts to access to healthcare, to education, job losses, which we know have been higher for women and for lower skilled and informal workers. We talk about lasting scars that will be left by the pandemic, Sifiso. These disruptions to education, the impact on human capital in the years, in the decades to come. We're starting to see just how devastating that will be in particular parts of the world, and our country is one of those. But we're yet to understand really the scale, I think, of the losses as a result of the pandemic and this global downturn.
Sure, Michelle, that's probably the scariest for me out of all of the considerations, right? And we've seen, I think, how people who have contracted COVID tend to struggle to come back to their old bodies post-COVID. I think it's going to be quite similar for South Africa. We've seen all of the developmental indicators continuing to slide. And I'm talking about Human Capital Development Index. I'm talking about poverty indicators in terms of a multi-dimensional poverty. So we look at healthcare access, nutrition, you're looking at education, you're looking at wages, and you're looking at social mobility. And in each of those categories, when you look at what's happening, they're really intrinsically problematic states that we're finding ourselves. And also, of course, the extent to which the digital divide is going to exacerbate inequality in South Africa, that those who are able to work from home probably had a better chance of keeping their jobs. Those who are able to study at home are better able to have better educational outcomes. And so you'll find that those who had a better opportunity to respond to COVID than those who didn't, right? And already we've seen that when people are exposed to high levels of poverty incidence, they become more discouraged in terms of job seek. They become, again, further out into the fringes. We often talk in South Africa about something called the half-life gap, and that's the amount of time it would take someone coming out of the lowest earning household quintile in the country to get to the highest. And that is about 22.5 years. And that's the half-life gap in South Africa. That a person coming from a poor family would need that many years just to have the opportunity to get into a high-income space. And that's really talking about the continued structural constraints for real social mobility in South Africa.
Yeah, devastating. Sifiso Skenjana, let me thank you for your time this morning. He's IQ Business's Chief Economist, talking to us about the latest World Bank Global Economic Prospects report, painting quite a grim picture for the global economy in the years ahead. And, of course, we're focused on some of the impacts here in South Africa, and they are wide-ranging.